The stock market recently faced a turbulent period as President Donald Trump's decision to impose tariffs on goods from Canada, Mexico, and China stirred fears of a global trade war. However, things took a turn after Mexico's president, Claudia Sheinbaum, announced a temporary deal with Trump to suspend tariffs on Mexican exports. This announcement led to a halt in the broader market's sell-off, with the Dow Jones Industrial Average trimming its earlier losses. Initially, the financial markets took a hit, especially with the news that Trump was moving forward with tariffs and even pledged to impose similar taxes on the European Union. The three major U.S. indexes had fallen over 1% at the opening, but they began to recover as the day progressed. By the close of trading, the Dow Jones was down by just 0.3%. Investors are still bracing for potential economic disruptions that could affect major companies' earnings and overall global growth. The uncertainty surrounding the tariffs had a significant impact on currency markets as well. The US dollar strengthened, reaching a record high against China's yuan. At the same time, the Canadian dollar plummeted to its lowest level in over 2 decades. As expected, global markets responded negatively, with the German and French stock markets taking sharp declines of more than 1.5%. European carmakers in particular were among the hardest hit. In London, the FTSE 100 dropped around 1.4%. The tariffs, set to begin on February 4th, are tied to Trump's concerns over illegal immigration and the flow of illegal drugs into the United States. These measures target the U.S.'s 3 largest trading partners, and as a result, Canada and Mexico have vowed to retaliate. China also signaled that it would take countermeasures and challenge Trump's move at the World Trade Organization. However, in a surprising turn of events, Trump and Sheinbaum announced a pause on the tariffs, giving Mexico time to deploy 10,000 troops to the border in an effort to address the ongoing issues. Despite this temporary halt, tensions are far from resolved. Trump has also indicated that he plans to introduce tariffs on the EU, although he suggested that a trade deal with the UK could still be possible. Many investors are worried that these tariff disputes could lead to higher inflation, reduced business confidence, and a potential slowdown in economic activity. The financial markets are clearly jittery. Companies like Nike and Apple, both heavily reliant on China for manufacturing, saw significant declines in their stock prices. Meanwhile, car makers including Tesla, General Motors, and Toyota also faced sharp losses in their stock values. European car makers, such as Volkswagen and Stellantis, saw their shares drop dramatically as well. In the wake of these developments, experts are warning that the tariffs could exacerbate inflation and increase prices for consumers, especially in key sectors like automotive and electronics. While Trump continues to defend his tariff strategy, stating that the U.S. will no longer be the stupid country, many economists are concerned about the long-term repercussions, especially the potential for a rise in stagflation, a scenario where high inflation is paired with stagnant economic growth and higher unemployment. With the tariffs set to go into effect soon, many are holding their breath to see if this will lead to a resolution or further market volatility. Investors are anxiously watching the developments, hoping that negotiations will keep these trade tensions from escalating into a full-blown global crisis. The coming weeks will likely provide further clarity on whether this trade war will be short-lived or a lasting economic challenge. Stay subscribed for more videos.